lot, and thanks to the entire AIWM team to successfully keep organizing this conference and getting all of us together once in a year to be able to learn from each other much more and more. And I'm sure even though it's virtual, I'm sure the learning is not reduced. And we will hopefully kind of keep learning from here. Thank you. So I'll kind of quickly start off, and I'll spend 10 minutes about what I think is really credible and a big opportunity for the entire alternative investment fund industry in itself. I think if you go back and look at all developed countries, including especially the US, the biggest development of the alternate asset management industry really started when two big, or rather three things happened. Number one, interest rates reached new lows, and post-tax returns for high net worth individuals as well as institutions became substantially lower than what would work for them. In India, for the last 12 to 18 months also, we've reached that situation. We see a lot of high net worth individuals, a lot of institutions, a lot of ultra high net worth individuals who are no longer satisfied with getting 2.5%, 3%, 3.5% post-tax returns. And that's kind of forcefully, in some ways, getting them to look beyond. And that's extremely, extremely important and critical, and maybe serving as a catalyst to the growth of the alternate asset management industry. The second thing, which is extremely important, is regulation. So we've seen a lot of proactive regulation from SEBI, starting from 2013-14, from the evolution of the license, from a tax perspective as well as from a regulatory perspective. We'll never be perfect, but we've come a long way from 2014. And even the discussion paper on sophisticated investors, is going to help in a big way. And I think both Cat 1, Cat 2, Cat 3, especially Cat 2 and Cat 3, have seen phenomenal growth over the last 6 to 7 years. So from a regulatory perspective, also, we've seen large strides on the alternate asset management industry. And in some senses, it's kind of now today a fairly recognized force. What we've also seen, there's a massive maturity in the distribution ecosystem. I think if you just go back 6, 7, 8 years back, there was a lot of hesitancy in alternative investment funds. The documentation has become substantially simpler. The ability to deal with a single custodian with a single NAV, like is in the case of mutual funds, is extremely, extremely makes the process extremely easy. A single NAV makes things much, much more easier. Distributors today are much, much more open to the entire concept of an alternative investment fund than where they were 6 to 7 years back. We've definitely seen a lot of maturity with some of the larger distributors. There's a lot of excitement also with a lot of the independent financial advisors, especially those who are handling mid to large size clients. And over a period of time, I think alternates will kind of become a core part of everybody's portfolio. Having said that, obviously it may not be more than 5 to 10% of one's portfolio, because by nature of the instrument itself is slightly illiquid. But having said that, it will definitely become a core part of everybody's portfolio. Lastly, we've seen the client ecosystem also mature substantially over the last 7 to 8 years. I think there was a patch in the middle, obviously when mid-caps were not doing well and some AIFs were mid-cap dominated, that there was a general feeling that AIFs don't serve any purpose. But what we've really seen, especially on the alternate side, which is essentially performing credit as well as unlisted equity and parts of listed equity, we've seen AIFs do extremely well. And most importantly, it's giving a chance to our local investors to become a part of the ecosystem and essentially participate in the growth journey of companies, which was something which was largely the domain of large foreign institutions. We've seen the advent, the other thing which has really led to the large growth of AIFs is all the multiple strategies which have kind of emerged over the last 5 to 6 years. We as a firm have been blessed to be able to take advantage some of these strategies. Other firms have also done extremely well. If I was to look today and see now 10 years back, I think there are multiple strategies across the listed side, unlisted funds, especially early stage private equity, then fund of funds, mid stage private equity funds, as well as late stage crossover funds. Within private equity itself, we've seen the emergence of 3 or 4 different categories. Within credit, we've got performing credit, which has emerged to be a big category. Obviously, it's not it's not conducive for investors who want liquidity. but at the same point of time, it allows us to take exposure to performing credit without being worried about daily redemptions. Performing credit, structured credit, and in some very, very few cases, distressed credit have emerged as very, very relevant categories. We've also seen long short become a fairly large category. Hopefully, there will be some bit of more tax clarity within this segment. But overall, as a product, I think the ability to give close to 7.5, 8% with an extremely low drawdown is something which has emerged extremely well. So overall, I think the emergence of these 7 or 8 different strategies and the ability to attract domestic capital in each of these 7, 8 strategies is also going to provide a massive impetus for growth. The most important thing is, we've had some excellent talent within the country, and also talent which is coming from outside the country, having spent some time doing this outside. Is immensely valuable and allows us to be able to kind of take advantage and harness those talents to be able to kind of give a fillip to the industry. It's a big opportunity for all of us. We've only seen the large firms like Tiger Global, to a certain extent, Tiger Global and Sequoia obviously being the largest, followed by many others who have really been the largest recipients, and the LPs there have been the largest recipients of wealth creation through domestic Indian home-grade tech companies over the last 7 to 8 years. I think alternative investment funds in its own way provide a great opportunity through early stage and mid-stage private equity and even late-stage private equity into tech, combined with even ideas like venture debt, which essentially allow us to be able to take domestic investors as domestic LPs into funds. Domestic investors are now able to and open to contributing 3 years, 5 years, 7, 8 years, 9-year capital to be able to take advantage of these opportunities. And I think one of the biggest opportunities in India really continues to be on the consumer tech side, both in terms of process disruption as well as in terms of the size of the market. And honestly, our clients have not had the opportunity to participate in this over the last decade. And over the last 3 to 4 years, through the advent of the alternative investment funds, we are now able to raise fairly large funds where all these domestic investors are able to come in as domestic LPs and hopefully benefit from the larger growth in the ecosystem over the next 8 to 10 years. Obviously, within the larger ecosystem, there will be pluses, there will be minuses, there will be successes, and there will be failures. But having said that, given the fact that we are a country of entrepreneurs, I think the opportunities out there are extremely, extremely large. And, it allows us to kind of take part in an opportunity and be part of a change, which we've really not been able to benefit out of. Having said that, obviously, it's very important for us as an industry and an alternative investment fund unit to not move ahead of ourselves very quickly. We still need to be very, very cognizant of the fact that the regulator expects us to be self-regulated. Pretty much like mutual funds started out a couple of decades ago. The angle of self-regulation over a period of many years really helped. It's associations and bodies like IAIWM, as well as other institutions which are fairly active in this space, which will help shape the policy and interaction with the regulator to ensure that we don't get ahead of ourselves. The only risk we run is if we go ahead of ourselves, if we take clients for granted or we take the regulator for granted, then obviously we run the risk of a lot of the regulations getting tighter without the growth of the industry. So it's something which we need to be fairly careful about. CRISIL has taken a very good initiative of getting into benchmarking of alternative investment funds across categories. I think it's a good initiative as it goes, and maybe over the next 6 to 8 months, as it becomes extremely standardized, hopefully we will be able to have value research kind of reports like we have for mutual funds, even for AIFs. And hopefully at that point of time, both self-reliance on data and ability to kind of be 100% accurate in terms of performance and the ability of investors to be able to see performance and decipher performance clearly will emerge. And that too will facilitate the growth of the industry. So very, very critical for us to not lose this opportunity. All in all, it's an opportunity which is fairly large. Alternates have the ability to become a very, very large piece of the cake. And especially on the active mutual fund side, as ETFs and advisory regulations take over, you will see emergence of alternate asset classes as a very viable opportunity to outside of the core portfolio. I think the core portfolio for clients will become largely ETFs and fixed income instruments, which are liquid on a daily basis. And all of us as advisors and asset allocators, both on the manufacturing side, distribution side, and advisory side, will have the ability to kind of take part in this entire ecosystem. So I think overall, both on the listed equity side as well as on the fixed income side, it's a large opportunity. I think we also see an opportunity not only for large players like us, but we've actually seen the ability of a lot of independent fund managers, and I can, without getting into names, there are at least 10 on the equity side and maybe 5 or 6 on the fixed income side, where the managers are able to kind of very quickly get licenses over 6 to 12 months and be able to kind of launch their funds. And even if they launch small, they have the ability of showing consistent performance for 1, 2, 3, 4 years, and potentially kind of get into the big league. An opportunity which is not really available if you wanted to run a mutual fund. So it's not only a big opportunity available for large firms, but it's also a very viable opportunity available for managers who've kind of excelled on their own and are able to kind of build track records with maybe relatively smaller corpuses, but are able to scale up substantially later, depending on performance. So overall, if I look at the, just to sum up and kind of sign off, if I was to look at the entire ecosystem, and I would say the overall growth of the industry, the economy, and the size of the market is extremely large. That's on one side. The second is the investment management stroke the talent side. That's also extremely large and something which a country like ours has enough access to. Third, obviously, is the multiple strategies and products, which again, as we've discussed, are multiple and are able to meet the needs of clients very efficiently. Fourth, both on the investing company side and the universe of where we can invest. We've seen India being a great creator of wealth creation, not only on the listed side, but even on the unlisted side, and also some very interesting opportunities on the credit side. I think on the investing strategy side, all of these three things together with the long short piece gives us huge amount of variety and the ability to add value to a client's portfolio. And lastly, we've got a regulator who's kind of supporting this entire growth of the alternate industry. So if I was to kind of sum it up, all the 5 specters put together point towards an opportunity which is going to be extremely large over the next decade. And I think alternates as a business, like it's been across the world, with some hiccups up and down, if you do it intelligently and as they say, do everything which is logical and not something which is illogical, I think the industry's got a long way to go. And all in all, it's an opportunity for us to lose. The size of the industry is going to grow for sure, and all of us have a big opportunity to be a big part of that ecosystem, whether we are big or we are small. And hopefully all of us can play a meaningful role as we go along for the next 5 to 10 years. So thanks for inviting me, and thanks Aditya for hosting this for the last 8 years and being able to get a large number of participants of the ecosystem together. Thank you.